And I'm saying that because they are not for profits or losses, so they don't prepare their financials based on making profit or loss. They calculate it like the way government calculates its uh, excess of its revenues over its expenses. So you see, government will say surplus or what? Deficit. Okay. So that's how they also term their profit. If they make profit, it is a surplus to them, but their mentality is not to make profit, or the aim of their organization is not to make profit. Okay. So without wasting much time, let me show you some key terminologies that will change key things to note under non-profit making organizations. Their cash book is referred to as the receipt and payment account. Okay. Their income statements is also referred to as income and expenditure account. Their statement of financial position is also statement of financial position. Okay, is the same as the statement of financial position, or what they call statement of affairs is the same thing. Okay, so these are some of the things you should note. So with them, instead of profit, they will say what? Surplus. And instead of loss, they will say deficit. Okay. Instead of cash book, they will say their receipts and payment account. Instead of their income statement, you will hear income and expenditure account. So if they say prepare the income and expenditure account, it's the same thing, income statement. But this time you prepare it like government account, no more of revenue, less cost of sales. No, you are not going to do that here. This time around, more of the government way of accounting. Now, these things are very important to note, okay? Because if they say it, maybe the requirement will be like prepare the income and expenditure account, but you don't know what is required of you. It is the income statement they are saying prepare. And this thing here, the income statement is much easier because here you are not going to do revenue, less cost of sales. Then no. To get gross profits, you list plenty things. No, you list all your revenue items, you list all your expenditure items, then you get your surplus or your deficit. Okay, by subtracting the expenditure item from the income items. Okay, now because they are not established to make profits, it means that they don't transact or they don't do business. So they don't generate revenues. Please, I'm taking it again. Because they are not meant for profits, it means they don't do business. They don't have a specific thing they do on the ordinary. Okay, that is meant to generate revenues. Okay, so it means that they don't trade, They are not into trading. And revenue is the amount of money you generate from trading. So since they are not trading, it means they don't make revenue. Okay. So every other thing they generate as an organization is termed as income. Okay. So please, these are some of the incomes NGOs are born to generate. Okay. So some of their incomes are their membership subscription. If they receive donations or grants from the government, falls part of their income. Please, what are some of the income they can generate? NGOs, what are some of the things that they will generate as income? Hello? So if they sell an asset and they make profit on that sale, profit on sale of assets, if let's say you see some NGOs, they can have a joint operation. Okay, even though it's an NGO, but they can have maybe a mini pub in the NGO, or maybe a mini business in the NGO that is making profits. So that profit they are generating from that joint venture or that mini operation. Okay, so profits from maybe a joint venture or a mini operation. So that profit and minimum. Okay, there are other things that would bring revenues to the business. So all these things forms part of the incomes of an NGO. But the one that I want to talk about the most is membership subscription. Please, this thing that I'm coming to do, you have to understand it. Now, how do I go back this? Please listen attentively because what we are coming to do, I'm coming to build a concept. Okay. Now, please, let's say this is my NGO. Okay. PKF Tuition Center is my NGO. Okay. Now, I have members, Mr. Douglas, Esther, Clara. Okay. Now, each month, let's assume each person pays 50 cedis. So Mr. Douglas paid 50 cedis, and let's say Madam Esther too paid 50 cedis. But this month, Madam Clara didn't pay. Okay, Madam Clara didn't pay. So if Clara did not pay, it means that the revenue I'm going to generate will be just that of Mr. Douglas and Clara. Now, mind you, since they are going to give me cash, right? 50 cedis is money, so it's cash. So the double entry will be two. And the double entry is that I'm going to debit cash because I've received cash of 100 cedis, right? I'll debit cash of 100 cedis because this is what I've received. But Clara was also supposed to pay me 50 cedis for that month. So I wouldn't say that because Clara didn't pay me, I'll not record it. I'll also debit Clara's account, okay? That she's owing me how much? 50 cents. Then I will credit my revenue account. That's the membership subscription, okay? With the total money I was expecting. That's 150 cents. Please, you understand? I'm saying that each person was supposed to pay 50 cents. Douglas has paid his 50 cents. Esther has paid hers, but it was left with Clara to pay. And I'm saying that even though Clara has not paid, since both of them has paid, since Douglas and Esther have paid, it means that I have realized 100 cents. That's the cash I have received. But with Clara, I have not received cash from her. So I will assume that, okay, I've received cash from Douglas and Esther, and I'll record it as cash transaction. But because Clara has not paid it, I will still record it as though Clara is still owing me. So for subscription, I know that I've received cash of what? 100 cedis. Do you get? So I will debit my cash with that 100 cedis. Okay, so this one I did all together. Okay, so I'll do it one after the other so that you understand. So I'll do the cash ones, then I'll do the credit one. So with the cash one, I'm saying that since I've received 100 cedis, I will debit cash with the 100 cedis and credit what? Subscription with that same 100 cedis. So this is the debit side. This is the credit side. So if I'm crediting subscription, I'll credit it in the name of cash because that's what we receive. 100 cedis. Okay. Then the one that they are owing to, I'm saying that I will debit Clara's account, okay, with the 50 cedis. Then I'll credit subscription again with what? That 50 cedis. Okay. So that here will be 50, okay, but here will show as a balance that Clara should top up. So if that balance comes to add up, we'll get 150 cedis, and that 150 cedis will be the revenue we've gotten for the period. So this will go to the income and expenditure account, okay, account as revenue 150, 150. But this closing balance will come to the next year as balance go down 50 cedis. And that 50 cedis is telling us that Clara is owing us that amount of 50 cedis. Please, any question? Please, any question? I want to add some people. I think, or I've done it already. If there is no question, I'm moving on a step further. So, assuming Esther for that same month gave us an additional 50. Okay, so let's say the next month, so this is, we are done with the first month. So assuming the next month, that's the following month, Mr. Douglas paid his 50 cedis. Esther also paid her 50 cedis, but Clara paid 150 cedis. This is the next month. So it means that Mr. Douglas paid for that month because the monthly subscription is 50 cents. Esther also paid for that month, which is another 50 cents. So it means that for Mr. Douglas and Esther, they paid for that the month in which they were. That's the second month. But with Clara, Clara had paid 150 cedis, and it is assumed that out of this 150 cedis, she's already owing 50 cedis. Okay, so that 50 cedis she's owing, she will pay it out first. Okay, she will pay that 50 cedis. So her 150, the 50 in it will clear the first 50 cedis. The other 50 will pay for this month, and the other one will be carried forward to the next month. So this time you are receiving cash of what? 250 in total, right? Cash 250 cedis. You see, we will not do it one by one, but this is how it is done. Okay, so this is the cash we've received. However, we know that out of this cash received, 50 cedis does not belong to this year. Sorry, this the second month. It belongs to the next month. Okay, that 50 cedis of Clara does not belong to this month, rather the next month. So if we are transferring, we will say that okay, there is already what 50 cedis there. So the monies that we are going to transfer to the income and expenditure account is 150. Then the 50 that does not belong to this month will be what? Taken to the next month, because Clara has paid now in advance. Okay, so that advance payment will come as a balance down of 50 cents. So what I'm teaching you is a basic concept you guys were supposed to do in accounting one. That's accruals and prepayments. Okay, income accrued, income prepaid, expenses accrued, expenses prepaid. We based on that knowledge also here. Okay, that's why um I did all this. So if you didn't understand this one, I think the step forward. I'm going to develop something, but I want you to use this first or get this analogy before I introduce what I want to develop. Okay, okay. Now, like I said, accounting is not. but it's based on the foundation you have and how you understand it. So if you don't understand anything, please just let me know and I'll listen to. Even though I'm recording today's section, you can tell me that, oh Paul, I didn't get this. I'll come back so that you can have a fair understanding of what I'm saying. So please, if there is any question, you can let me know. Okay. So without wasting much time, I'm going to give how by format how the subscription account looks like. Now, please, you always realize that anytime there is cash payment, it is on the credits of the subscription account because the subscription account is a sorry, it's an income account to the organization. Okay, and with incomes, it means that since you've paid, the person has paid his subscription, it means you receive cash. So the double entry is that you will debit cash. Okay, so since the person has paid, let's say Mr. Douglas, all the three people paid, let's say 150 cents. So you receive cash, so you debit cash, then you credit subscription in the name of cash. Please, you understand? It is always at the debit side of the subscription account. So you would say that the income, what you are going to transfer to income and expenditure, is always at the debit. But please, before you know that amount, you have to know these ones. Now, we realize that when Clara was owing us 50 cedis, this was the first 50 cedis Clara was owing us. Okay, it was on the credit side. This is a closing balance, okay, but it is a debt owing. Clara is rather owing us, okay. So this is subscription that we have to receive, but Clara has not paid it yet. So that closing owing, okay, is always at the credit side, okay. We add it to the cash payment, okay. Hmm. And also, when Clara paid in advance the next month, that advance payment was rather on the debit and it was a closing balance. Okay, so that advance which was closing also will come here prepaid. It's a payment in advance, but it is on the closing date, so it will also come. Now, please, you see that this closing owing came as an opening owing and it was on the debit. So likewise, every closing owing will come to the debit as much an opening owing. Okay, so owing on the on the on the debits, and also every closing prepaid will come as an opening prepaid on prepaid on the credits because it is closing, so it will come as an opening. So please, this is how the account looks like. So when you are done, you add everything on the credits, you add everything on the debits. So This, let's say when you add this will give you A. Obviously, it will be the bigger side. Then you add that same amount, you write it here. Then you find the difference between that amount you got and these two, and that will give you what you'll be transferring to the subscription account. Please, any question? Any question? Did you understand this? What I just did? Did you understand? If you didn't understand, let me know. If not, I would teach another approach to it. Um, so, um, honestly, it's a bit. So this approach I'm coming to do is more of a true and core approach. Okay. Now, this one is, it doesn't follow the traditional tier account. Okay. So subscription. Now, please. Now, you know that income, income is profits. Income is mostly made when assets are increased. Okay, income. When we say that, when we are defining revenues or income, we define it as an increase in assets or a decrease in liabilities, which is not as a result of what, a, an increase in what, equity. So anytime we are defining income, we are looking at it from the assets, that's in advanced level. We are looking at it from the assets perspective. Okay, so now I'm coming to teach you. You know, cash is assets, right? Cash is assets, right? Hello. Hey, please, I said cash is assets. True or false? Yeah, it's true. Yeah. And you know that if someone is owing you, that money to you is an asset to you. Yes. Right? If someone is owing you at the end of the period, you know that it is a receivable which you've not received yet. So it is an asset to you. So we've established the fact that one, cash is an asset. Okay. Now, if someone is owing you and the person has not paid you yet, we are establishing another fact that that is also an asset, right? So closing owing, okay, is also an asset. Now, if there's also an asset, we've established that. Now, if let's say someone has given you money in advance last month, okay, for a service which you will be providing it in this month, okay. So in last month, there it is not your asset, it is a liability to you, right? Hello. Yes. Good. But if it comes to this month and the person starts consuming the service, it moves from a liability to what? An asset. It is income, but because you've not given the person the benefit of the service, it is not an asset, but rather a liability. We call it a deferred income. You've intentionally deferred it because you know that you've not earned it yet. Okay, you've. So what I said is that I'm taking it again. Your subscription account, you bring your opening own, the cash paid, and the closing own, because these are all assets. So you list your assets first, because an increase in asset growth result in what? Revenue. So you bring those assets first. Then you less your liabilities like closing prepaid and also the opening own. Okay. So you less those two, then you get what? Your income and your expenditure as this one. Okay, you get your income and your expenditure. Please. So what you get, if it is positive, then it is income. If it is negative, it is an expense. Okay. If it is positive, it is income. If it is negative, it is an expense. Please, any question? Any question? Okay. So another thing that uh will become we would need workings on is profits from other operations. Okay. Now you see there might be like a bar or maybe any other operation. So let me write it. Profits from other operations. Okay. So we would have to prepare the profit statement for those other operations so that because we are not established to make profit. However, because we are in a joint operation or we have another operation, we would have to first of all treat that operation as a separate entity from the NGO. When we are done, the profit we make from that operation, we treat it as revenue. Okay, so